Welcome back to the Agent of Wealth. This is your host, Marc Bautis. Today I'm joined by a special guest, Stephen A. Weisberg. Stephen's the founder and lead attorney of the W Tax Group, bringing over a decade of experience helping individuals and businesses resolve tax debt, audits, and other IRS disputes. Stephen's client-first approach starts with a free tax debt analysis to provide absolute transparency and customized solutions designed to meet the unique needs of each and every client. His proven track record of delivering favorable results has made him a highly sought-after tax defense attorney nationwide. Stephen, welcome to the show.
Thanks, Mark. Thanks for having me.
So maybe you can just start off just explaining a little bit about what tax debt is and how it typically arises for some people and businesses.
Sure. So, very simply, tax debt is when you owe money to the IRS, but that comes up in a few different ways, and there's different types of tax debt. I work with a lot of individuals, certainly, but also individuals who are self-employed, who have a single member LLC, and also business owners who have a business with multiple employees. For individuals and individuals who are self-employed, tax debt arises when you either file a tax return or don't file the tax return, but you owe money on that tax return to the IRS. A lot of self-employed individuals owe money to the IRS because, of course, the money's not taken out of or the taxes aren't taken out of their paycheck because they're self-employed and they either forget to or don't make quarterly payments to the IRS. And then at the end of the year, when they owe money to the IRS, they say, "Oops, I spent it all. I need some help."
So how soon after usually does the IRS come back and say, you owe us this much? Is it do they know immediately, or does it sometimes take some time for that to catch up to the person?
Yeah, it depends on the situation. But if you do file a return and you have a balance owed, you'll get a notice that says that you owe the amount, within a few weeks, maybe a month. If you don't file a return, some people think oh, well, I just won't file a return. Well, that puts you even in a worse situation because the IRS is ultimately going to come after you. They're going to either file a return on your behalf and not allow any deductions you have. But then you're also going to owe the failure to file penalty along with the failure to pay penalty. So I guess it's a long-winded way of saying, you file your return, you will get notified that you owe money to the IRS, but you want to file your return, even if you can't pay the total amount owed, or if you can make a partial payment, that's better than not filing at all.
And is what you mentioned the most typical use case where someone probably should have been paying quarterly estimated taxes, they don't, and then there's just not money there at the end of the year?
That's a lot of my clients are in that boat because, as you've probably been aware at some point in your life, when you get that paycheck and taxes are taken out of it, it's a given. The taxes are taken out of it. It's coming out each week or each bi-weekly when you get your return. Checks. But when you're self-employed, if you're not, able to each quarter make yourself send over a check to the IRS, and you just say, "Oh, I'll figure it out later," and then it gets to the end of the year and you realize you owe a bunch of money to the IRS, but you don't have the money, that's when it becomes a problem.
Yeah, kind of on the financial planning side, that's one of the things I recommend is people automate things and automate your savings to whether it's your 401k or this or that. But I guess also they should probably automate saving or paying, that quarterly payment if they're not an employee or if they have to. So let's walk me through kind of what a scenario looks like or how you get engaged and how you help. When someone comes to you and says, "All right, I got a letter from the IRS saying that I owe this and I don't know what to do next, or I don't have the money to be able to pay." What happens next?
Sure. So, I don't know if you've heard, but I know many people have heard on the radio these ads that say, "Hey, we'll resolve your tax debt for 10% of what you owe." And what happens is you end up calling those guys and they say, "Yeah, we can resolve your tax debt for 10% of what you owe. Hand me over whatever $10,000 and we'll figure it out." And then they file what's called an offer in compromise, where they try to settle your debt for 10% or whatever the number is of what you owe, and then it gets denied, and they say, oh, sorry, I filed it, and it didn't get accepted, but I did what I was supposed to do, and then you're out $10,000 and you still owe the money. I say that because the way that I do things is much different. I mean, anyone that tells you that they can resolve your tax debt without ever looking at your tax debt situation or your financials is lying, for lack of a better way of saying it. So what I do is I give a free tax debt analysis up front. Um, and you will pay me a certain amount, about usually $500. That $500 then goes towards the ultimate resolution that we start working on. But what I do is I do an analysis of all your taxes, how much is owed. I find out how much is owed, what's the balance, how much is interest, how much is penalties. I find out um, I mean, whether you have returns that need to be filed, because you have to file all your returns in order to get into a resolution. And then I talk to you about your financials, and taking all of that together, I make a determination. I say, look, based on my experience, based on my expertise, this is what, this is how much you owe. This is what you need to do, whether it's file returns or it's, um, you know, uh, you know, get into a resolution right away. And this is what I advise you to do moving forward in terms of resolutions. And this is what I think I can do for you moving forward. So I lay it all out there initially so that we're all on the same page. You know how much you owe, what you need to do, and you know what I think that I can do for you. And I'm aware too. So I'm not, again, going back to the earlier scenario, I'm not saying, hey, give me $10,000, I'll figure it out. I tell you exactly what's happening, what's going on, where this money is going to go, and how we're going to resolve the underlying issue.
What are some of the? I know you mentioned the offer and compromise, and maybe just we can just cover that a little bit. What you mentioned someone getting denied. Are there instances where that is accepted, or that is a actual resolution that can work?
Yes, and everyone loves to hear about the offer and compromise, and certainly that's the best option if you're qualified for it. The problem is not everyone qualifies for it. I would say most people don't qualify for it, but it does work. When it works, and it's a great resolution. You just have to qualify for it. And if someone's telling you that you qualify and they've never looked at your case, then they're making stuff up. So certainly, it's not made up. It sounds too good to be true, and it's only too good to be true you know because not everyone qualifies for it. But when you do qualify for it, it works, and you can settle how much you owe for a small percentage of what you owe. So you might be able to, settle. I'm just making up numbers, $100,000 debt for $500. It's a real thing, but it depends on what you owe, what years you owe for, your returns that need to be filed, and then your financial situation.
So how does it work? You're basically making up this, or there's some kind of form or some kind of process that you basically have to apply for it, and then they look at it, and then they come back. The IRS comes back and says denied or approved or modified or something, some kind of response. Okay.
Yeah, you prepare a form. It's called Form 656 and 433 AOIC. You prepare those forms. It's simplistic in terms of what you need to do and the formula that the IRS uses. Obviously, everything going into it is completely complex, and you have to prepare it properly. You have to use IRM, which the IRS uses to make decisions and make determinations. And so you have to prepare it properly, send it off to the IRS. Then you get into a negotiation with what's called an offer specialist. If that gets denied there, the offer gets denied there, which it does many times. You can appeal, and then you have to go to appeals, and sometimes they get resolved in appeals. But there's a lot that goes into it. But it is formulaic, where the IRS has a formula that they use to determine whether you qualify for it.
Okay, so let's assume someone doesn't qualify for it, and I guess when you do that tax debt analysis, do you have a good feeling for whether someone would qualify for it or not?
Yes, exactly. I'll have a good feeling. And so, look, offer and compromise, I think it has different from year to year, but it has about a 45% success rate when it's sent in. My success rate though is 95%. because I'm not sending in offering compromises that don't qualify or that don't make sense, or but the problem is there's so many people that are sending in offering compromises when they don't qualify, and so all those get denied. When I send it in, um, I have a very good feeling about it. I know the financials, I know the situation, and if I send it in, it's because I think you have a good shot at it.
Okay, so let's assume it's not going to work for someone or they're not going to qualify. What are some of the other ways to get the tax debt resolved?
Sure. And it's a simple question you're asking, but it's a perfect question because offering compromise is kind of the holy grail, but it's not the only resolution. And there's plenty of other resolutions that you can utilize, to get your case resolved. Um, First and foremost, there's what's called an installment agreement, which is a monthly payment that you make to the IRS. Now, again, seems pretty straightforward, and it technically is, but for practical purposes, it's not. There's multiple types of installment agreements. There's what's called a partial pay installment agreement, where you pay the IRS on a monthly basis, but you never end up paying off the total amount of the debt that you owe. And that's because the IRS only has a certain amount of time to collect from you. They have 10 years from when that tax debt was assessed. So, just for instance, again, we'll use the $100,000 number. If you owe $100,000 and you're paying the IRS $100 each month, you're never going to pay off that $100,000 by the statute of limitations. Uh, let's say you only paid, let's just make up numbers again. Let's say you paid $10,000 by the end of that statute of limitations. Even though you owe $100,000 and you only paid $10,000, that total amount of $100,000 gets wiped off. And that's in a partial pay installment agreement. And that's where I've had much more success than an offering compromise. You still have to qualify, but there's more wiggle room there. It's less scrutinized, and it's a better way sometimes to get someone to resolve their taxes for only a partial amount of what they owe.
So isn't it, I mean, it sounds like it's almost like an offer and compromise in the sense that you're paying less than what you owe. And I'm sure the IRS can figure out if they're charging $100 a month and that the debt is never going to be paid. Why would they do something like that? Just to kind of, I don't want to say reward someone for paying for that specified period of time, but is there another reason that they would do that?
Well, again, it comes down to your financials, your assets, your income, your expenses, everything. They take a look at that, and they're only going to give that partial pay installment agreement to you if they think, look, getting $100 a month is better than getting nothing, because this is all this person can afford to pay based on our standards and the way that we analyze cases. So this is the amount they can afford to pay. We'll take that. And even if we don't get paid off the total amount, we'll at least get something. On top of that, those sometimes are looked at again down the line. So you may get into a partial pay installment agreement, and then 5 years later, the IRS takes a look at it and says, "We think your financials have changed. You're filing returns and you're making much more money than you were before. We want to look at your financials again to see if you can pay more."
Can they do the same thing on like an offer and compromise, like come back and reassess it?
So the offer is different, and this is kind of why the offer is kind of the holy grail. Because let's say you resolve your tax debt for $500, you have to pay that $500 within 5 months,
Okay.
and then your tax debt is gone. But you also then have to remain in compliance for the next 5 years, meaning you have to file your returns timely. If you owe anything each year at the end of the year, you have to pay that amount. You can't, have a balance owing. So if you don't, if it's 3 years later and you don't file your return timely, that offering compromise is going to come back and bite you. And the total amount that you owed initially is going to come back, even though the offer was initially accepted.
So I'm sure, like with most things, someone can choose, I'm going to try and do this myself, or they can hire a professional like yourself. What are some of the, I don't want to say mistakes or things that people overlook with when trying to do this themselves, and reasons why they would want to hire a professional?
Right. And, I do get that a decent amount, because it does seem, and it is straightforward in terms of what you need to do. The problem is, the Internal Revenue Manual, which is what the IRS uses to administratively to deal with your tax debt. It's very complex. The IRS has certain rights that they can do things and certain ways in which they do things, and then you as a taxpayer has certain rights in terms of what you are able to do, how you're supposed to be treated, etc. And the IRS does not have your best interests in mind. So they may trample all over your rights. And if you don't have someone there that's going to say, well, hey, wait a second, this is not how things are supposed to go, the IRS will do whatever they want. I mean, they're literally the largest and most powerful collection agency in the world. They have so much power, and the taxpayer has so little power that you're really at the mercy of the IRS if you don't have a professional representing you.
Taking a step back to what can cause tax debt. So we talked about that self-employed person who just doesn't pay their taxes. But
Right.
let's look at this from like the lens of an audit, which could also result in taxes owed. Do you see that a lot where they either audit a business, audit an individual, and the result of that is where the IRS says, okay, now you owe this big lump sum that they might not have the cash available to pay, and that becomes a problem.
Sure, audits happen. They've actually been happening a lot less than they have in the past, which is good for people in one sense. But obviously, if people are cheating on their taxes, it's not good for the society as a whole. But certainly, the IRS does a lot of what's called correspondence audits, where they'll send you a notice that says, "Hey, we think you owe X amount. You said you owed Y amount. We're going to look into this." And you have to respond accordingly and say, this is why I don't owe the amount that you are saying I owe. And that comes down to, tax law, administrative law. It comes down to, making sure you're getting all deductions, making sure you're getting all the credits, making sure that they're calculating the amount that you owe properly, because they may say it's one way and it might not be actually what they're saying. And if you don't have representation, you're going to have a hard time defending against that.
Now, you mentioned like representation, and I know you're an attorney. I would think most people, once they get a letter or they get something from the IRS, they're going to think, okay, let me talk to my accountant, my CPA. What's the difference in terms of what a CPA would be, and that's from both the audit and the tax debt side of things, versus what someone like yourself could represent or handle for someone?
Yeah, and that's a great question. A CPA certainly can help you with this. The reality is, I get a lot of referrals from CPAs because they're not well versed in how to do this type of work. My niche and my expertise is with tax debt and tax controversies. That's all I do in my practice. I don't do anything else. I'm not doing, bankruptcy. I'm not doing divorce. I do tax debt. Your CPA, your tax preparer, they're usually well versed in preparing your taxes, but they're not well versed in dealing with the IRS and defending your rights. So, like I said, a lot of times the CPA will say, "Hey, Stephen, I don't know what I'm doing here. I've got a taxpayer client here that owes whatever, $50,000, and I don't know how to help them and how to defend them. Can you take this on?" And I'll do that. And of course, the client always stays the CPA's client in terms of tax returns and preparing and all of the accounting stuff. I just handle the tax debt issues and the administrative law issues. But so again, a lot of CPAs are well aware they don't know how to handle the case, and they send them to me, and that's great, and that's how it should be. There are some CPAs, tax preparers, well, not tax preparers, because tax preparer can't represent you, but CPAs who might say, "Yeah, I can figure this out. Let me just handle it." And that's not always the best situation, because you can't just figure it out on the fly. And then you might be putting yourself in a situation where you're getting a bad result and you're being hurt by representation that isn't very good.
Is there, I know we're talking a lot about, obviously it gets to this negative situation where you have to get involved, but is there anything that someone can do like before or to kind of preempt and prevent actually having a tax problem? I know you mentioned obviously paying quarterly estimates is definitely one thing, but is there anything else that they can do or review their tax situation, look for red flags that might be a problem down the road?
Yeah. Well, and you did mention it. I mean, automation is really the key here. So you don't even have to think about it. Just, those quarterly payments get sent off on a quarterly basis and you don't have to think about it. Don't wait till the last minute. That said, once you realize that you're going to owe something for the year, you want to get on top of it right away. A lot of people wait till the last second, and their bank accounts are levied, or they're getting those final notices of intent to levy from the IRS, and they come to me, scared, and the amount of leverage that we have is a lot less once you get to that point. You want to have someone come to me or come to your CPA or attorney, once they realize they're not going to be able to pay their tax debt. Don't wait for the notices to come out, because once initially when you realize you're going to have to pay, you have much more leverage with dealing with the IRS. You can take your time. You can make measured decisions. You can really put a plan into place about how you're going to handle this. You can make partial payments. It just, you have a much better shot of resolving the underlying tax issue if you come at it from a point of, look, I know I'm going to owe this money. We need to figure out how to resolve it, as opposed to wait until the last minute, or waiting until the IRS is also already taking action against you.
And action, is that a notice, or is that even like, do you see people that just ignore the notices and that's when they take the action? Is that
Right.
now? What about that person? And I've seen this before, that just doesn't file returns. Would there, I don't know, is it best interest for them to just like talk to someone like you and kind of, do you ever like preemptively go to the IRS and say, you may not have caught this already, but we haven't filed returns in 3 years and this is how much we think we owe?
Yeah. So, in practice, how this works is, um, the IRS. Well, I'll answer both sides of your question, but the first part is, if you don't file your returns, the IRS is going to go in and file what's called a substitute for return. They'll file a return for you because they know what kind of income you had for the year. But they're not going to give you any deductions. They're not going to give you any credits. And, as certainly as a business owner, when you have a lot of expenses to try to run your business and the IRS doesn't give you any deductions, if you have $100,000 that you made for the year, but you had $75,000 of expenses, the IRS just sees the $100,000 in revenue number. They're going to give you a tax based on that $100,000. So the first part of this is the IRS will file the return for you. If you don't file a return, they don't just like leave it and say, oh, well, they didn't file it, we'll kind of, just see what happens. They'll file a substitute for return for you. Um, but yes, if you haven't filed the return, and even if the IRS hasn't filed that substitute for return, you want to go ahead and proactively file the returns, um, because you're going to get hit with that substitute for return. Now, that said, you only have to file the last 7 years. So, honestly, I have people that come to me that haven't filed in 20 years. And if that's the case, you don't have to file all the way back for 20 years. You only have to file for the last 7 years. But yes, you want to get on top of it. You want to file them and start looking for a resolution and start negotiating with the IRS before it starts getting crazy and the IRS files those returns on your behalf and then is, levying your bank account, or garnishing your wages.
How does interest and penalties work in terms, and how does it correlate to like kind of the prevailing interest rate? Is the IRS charging interest more at a higher rate now than it was a year ago, being that interest rates have gone up?
Yeah, that's exactly right. The interest is not so bad. The interest is based on the prevailing interest rate. So yes, they are charging more now than they were a few years ago because interest rates have gone up. And it's not great to have interest, building on a debt that you have, but it's relatively reasonable. It's not like they're charging 15% when the prevailing interest rate is 6%. Um, the penalties are where is the biggest problem. There's a failure to file penalty where you don't file your return, you get penalized. There's also the failure to pay penalty. Both of those, so each one of those individually can get up to 25% of the total amount that you owe on the tax debt. So both of them together, you could be paying an extra 50% of the entire bill, um, which is not good. And as you can see, that gets up to some big numbers. And so that's why I mentioned earlier, even if you haven't, you can't pay the IRS, you want to file that return, because at least it stops the failure to file penalties. And if you make a partial payment, some of those failure to pay penalties will go down. But if you just leave it so that you just don't have a return on file and you have no payments on that you're making, that those penalties get pretty egregious.
Yeah, I could definitely see that. All right, Stephen, that's all the questions I have for you today. I want to thank you for joining me on today's episode. You provided so much valuable information to the audience. Before we go, how best can our listeners get in touch with you or learn more about your business's services?
Sure. I'm very active on LinkedIn. So, I post a lot. I put out a lot of newsletters. So that's a great place to find me. My name is Stephen A. Weisberg. Again, find me on LinkedIn. But on top of that, my telephone number is 248-971-0885. That's 248-971-0885. That's a direct number to me. And it'll come to me. You're not going to have someone in the middle there picking up. It'll come directly to me. As you said, I'm the founder and the lead attorney of my company, the W Tax Group, and you can find us at wtaxattorney.com. Where I would start is LinkedIn, Stephen A. Weisberg, telephone number 248-971-0885.
Great. We'll link to all that in the resources section of the show notes. Thanks again, Stephen, and thank you to everyone who tuned in today.
All right. Thanks, Mark. Appreciate it.